Litha Healthcare's full-year headline earnings per share climbed 28% to 23.2 cents, while revenue increased to 38% to 1.7 billion rand. And joining us from the JSE to unpack the numbers for us is the group's CEO, Selwyn Kahanovitz. Thanks so much, Selwyn, for joining us this morning. Let's get straight into these numbers. As I said, pretty impressive numbers coming through, and over the period, the company's been very, very acquisitive. Run us through the kind of strategy the company is pursuing, because it's one that you're continuing on with, hence the lack of a dividend payout.
Good morning to you. Thanks very much for having me here. Yes, when we listed in 2010, our main objective was to try and build scale in our pharma division, which was at that point our smallest division. And that's in essence what we've been doing. So the acquisitions last year that we did was Goldex and then OTC towards the end of last year. And that's starting to give us a little bit of scale, and that'll only start coming through in Q1, Q2 of this year. But for us, we were really excited to announce our Pharma Plan acquisition a couple of weeks ago. And for this, really, this is our, in terms of our corporate business, this is our biggest milestone since our listing in 2010. And we're really excited with this, because this really will bring scale to our pharma division. It's a business that has been growing at in excess of 25% compounded annual growth rate per year, top line and bottom line. And we think that'll really add a lot of product to us, products that they already have in the market, as well as their pipeline.
Well, we were chatting to Yusuf a little earlier, and he was saying, it's certainly encouraging the kind of growth that you're bringing into the stable and the kind of scale that this business is acquiring. But one of the questions that investors out there have is just how soon we'd be able to see the bedding down of these acquisitions and the company being able to fully leverage off the kind of synergies that come with acquisitions. What kind of target have you set out?
Exactly, and what we've done is we purchased the building in Midrand in the third quarter last year, and only towards the end of last year started moving into that building. So we had 8 different sites in Johannesburg. All of those businesses are now starting to move into our building in Midrand. So we believe by the middle to the end of this year, all of our businesses will be in the site. Our shared service center, which will be working in each of our divisions to cut costs, cut duplication, and just add the synergies that we need to develop out of our, the acquisition that we've just taken, as well as all of our businesses. So we really believe this year that we'll start making an impact with this integration. As you know, the Pharma Plan deal only is effective 1st of July. So we can only start looking at the integration of that business third quarter this year. So I think this year we're really looking at bedding down all the investments, bedding down all the acquisitions, just to make sure that we can integrate them effectively. And
it's not just a bulking up of the business that we're seeing come to the fore, is it? I mean, we've also seen operations being discontinued over the period. Litha Critical Care and Litha Cardiac were disconnected specifically, and it seems that its exposure to the public sector on the one front that seems to have been the influencing factor there.
Well, I think, the Litha Critical Care is a business that when we took over in 2010 was already, there were issues in that business, and we just tried to work through them and try to see if we could make a difference and, not close it down as we have had to do. But in the end, we just felt it was the best thing to do, was to exit that business. It's very small. It wasn't a very big turnover and really didn't have a material impact at all.
As we see this business grow, Selwyn, net operating margin sitting at 8.3%, and it seems that there's a change in product mix, where you've been primarily focused on medical devices to now a broader product mix that's going to be influencing this position moving forward. So you're paying for diversification. To what extent?
Exactly, and I think that's, when the business was purely medical devices, now we've got a mix of vaccines, which is importing and distributing a much lower margin. Our pharmaceuticals is similar margin to the medical devices, but it's really that mix that we now believe is at a number that we're comfortable with, and going forward we'll just need to manage it.